Our model allows anyone from the world to quickly do KYC on our platform and then deposit anything from $10 to $1,000 to $1 million. So we really kind of make that barrier. What really was important for us, the democratization, that no matter in the world, if you have $10, if you have $1,000 and you have RLUSD and you want to start earning yield, you can easily, just onboard to Soil. We are compliant, so it works. And I think that's super differentiated amongst other projects. And then what we do is we diversify geographically, we diversify regarding the strategies, and then we choose the best manager in a specific strategy. People that actually employ through these funds, we help employ a ton of people in Poland and the countries in Central Eastern Europe. I think this is just the beginning. It's going to be exciting. So here we are.
Hey and welcome to Krippenreiter TV, our weekly series on Monday, hosted by me, Krippenreiter, and usually also with Vet, except for this time, private life and family always comes first, but he will certainly join the show next time again, so no worries, folks. This time, I welcome Nicolas Motz to the show, co-founder and chief investment officer at Soil. With over 12 years of experience in credit and asset management, Nick is also the founder and CEO of Mount TFI, a regulated Polish investment firm managing well over $200 million in assets. We will talk about the whole legal structure in a minute, but he's also CEO and managing partner of Orco, the global on-chain institutional asset manager behind Soil's real-world backing. Soil has already successfully launched on many EVM networks, primarily Polygon, over the past 3 years, and will also officially join the XRPL ecosystem on Tuesday, to allow for yield on stable coins that lets you earn fixed 5 to 8% APR on RLUSD only currently directly on the XRP Ledger. So no bridges, KYC gated, full transparency, a loan to Soil backed by institutional grade assets like US Treasuries, money market funds, private credit and grant strategies, all EU compliant and on chain. If you're curious now and want to explore those yields yourself, check my referral link down in the description to xrpl.sol.co in the description. Full disclosure, it's an affiliate link that helps support the channel if you want to use it. I will receive a small commission if you do, but at no extra cost to you, obviously. Also, you can also obviously just don't use the ref link, so no financial advice. Hey Nick, I hope you're doing great. Did you survive the crypto crash the past days?
Yeah, it was great to be here. Thanks so much for the great introduction. Yeah, I think we're alive. So I think it's evening at least here in Poland, and the market is a little bit up at least from 65 to 70 today. So
Awesome.
But it's been wild. So it's been a long night. Last night, a lot of investors are calling us that are barely or just started investing in the blockchain space. So. It's been a good week. So happy to kind of share my thoughts and just get comfortable and relax a little bit with you guys.
Nice. When I think about the past, I probably also always think about bear markets. I think about just craziness in the market. So maybe walk us through your journey in general, from getting together as a team to launching a stablecoin lending business backed by RWAs on Ethereum first, so Polygon, to now actually launching also on XRPL in partnership with Ripple, actually. Was it a pretty rocky road, or was it easy for you guys over the years?
I think every founder probably on your channel says it's a bit of a rocky road. It's always ups and downs, but I think the main thing is persistency and just not giving up. I think if we believe in our vision, it should happen. If it's better, we work hard, and hopefully at the end of the day we'll have a success or a bigger success. So it's been kind of like, to take it, way back. My beginning as a founder, I worked in, let's say, private equity. I worked in a hedge fund, and then I decided to find my own asset management firm at the age of 28. So it was quite early for asset management. And so the idea was to kind of find niches in the market, which are, alternative assets, meaning private credit, private equity, real estate. So not kind of equities and bonds in the main assets. And then in Poland, there was an opportunity to find an asset management company that actually specialized in these asset classes. So at 28, I decided to go on my own, invest whatever I had. As a family, I also got a bit of support. And it was really kind of 1 million under management. Today, we have about 260. So everything was raised throughout the last 8 years of just talking to investors, getting confidence, building a brand. And the most important, I think it was recruiting great people. And I think the backbone of today, what we'll talk about, our vaults, is really a strong investment team that has, let's say, over $1 billion of transactions in private credit, very strong, let's say, resumes. So it's in investing, you really want to have the trust and the people that have been through different cycles, such as one that we have today. So we're not trying to stress out. So founded Mount TFI. But one thing that really kind of was always on my head. So if you know, for the people listening, you know, asset management is, you know, really kind of old school kind of business. We have the BlackRocks and the biggest guys. What you do, you know, you try to make money in simple terms for clients. So you take, you know, their money in a safe way, have the best team in order to deploy that capital and try to make a return on it. And if we do a good job, we also make a fee on it. But if you think about it, it's really old school. It's really old school from, like, you know, from good old times. I take money, I give, you know, a return. So I was always thinking, okay, how can tech in any way, and I didn't know if it was blockchain, how can tech kind of revolutionize this financial landscape in any way? And something that I have also been in a background, you know, traveling a lot. So I'm like, okay, there needs to be tech. There needs to be a way to, you know, democratize this kind of, you know, old industry. So I started looking at a lot of, you know, technologies. And I think about 3-4 years ago, it was kind of blockchain was kind of like the way you can kind of, anywhere in the world, is send money. Stablecoins were starting to get popular. So I was like, okay, let's kind of work on this technology. And that's kind of my first kind of sprint to crypto and blockchain. And I met, you know, I was fortunate enough to be on the Forbes under 30 list. And I met this guy, and Matt, which is our CTO and currently at Soil. And he's like, Nick, so I know these great guys that are trying to do something with, you know, blockchain, and they're trying to do something with debt. So they're tech guys, but they don't really have that debt exposure. You're from private credit background. You want to get into tech. How about you guys combine? And I'm like, okay, yeah, let's have a meeting. And so over 3 years ago now, myself, Jacob, Michael, we met through Matt, our CTO, and us four. We're like, okay, let's put our heads together. I think there's an opportunity in the market. So how can we kind of form this kind of protocol where we can kind of onboard clients from around the world through stable coins and use the infrastructure know-how I already have within Mount TFI and my relationships with different asset managers globally, and then combine that into a platform and then do this whole new thing and pretty much democratize access to this old industry that's always been kind of for the high worth individuals or big family offices. So that's kind of the journey. And then, you know, continuing on the rocky road. So we launched on Polygon first. So we've been actually operating Soil for over 2 years now. And we've generated yield for protocol treasuries, for individual investors. So we've been doing this, and we decided to, you know, one thing I have to say is that, you know, a lot of the times we were doing everything rocky because it was just bootstrapping, and you kind of want to get support, but you don't really get support from, let's say, the foundations. And this is something that it's a different thing with Ripple. Not only has the team helped us, but, you know, we're working with, you know, Ripple Commons. We're working with all these guys that are really trying to help us out yourself. So we started hearing about Ripple, that they have a great community. And then in last year, in the spring, we applied for the accelerator that was done with DIFC, so the Dubai Financial Institute, in order to kind of bring in cool projects to kind of deploy and build on your sidechain, on Ripple sidechain. So that's something that we got. That's kind of how first we got introduced to Ripple. We got kind of, let's say, the first grant in order to kind of deploy. But over the months, as you know, you've been no better than me, the Ripple kind of said, okay, listen, this is such a, you know, cool product. Like, we're doing everything with our focus on the mainnet. So how about you guys kind of refocus and kind of show us if you can build this on the mainnet? And that's kind of since probably early summer, we started really working hard in order to be able to kind of go live with, you know, an XRPL. And long behold, on Tuesday we're going live. So super excited. So that's kind of the rocky road, and I think this is just the beginning, especially with loan protocol coming and everything. I think it's gonna be exciting. So here we are.
Awesome. I mean, it will be very exciting because we are just starting. First, stable coins launching right now. Like the obvious first one will be RLUSD, but I expect you will also in the future expand on other stablecoins as well as the protocol majors on XRPL and also as the ecosystem majors. I think you have a really great chance to offer products that were impossible to offer to the usual retailers like us, but even for institutions as well. And when I think about institutions and when I think about retail and DeFi, there is this one fact that most companies that launch a DeFi protocol, they have their corporate residency in Panama. But for you, it's actually a little bit different, right? Your situation is multi-jurisdictional. It's people are seeing soil, but in the end, the legal and corporate structure is way more complicated and detailed, right? Why is it? Why does something like Orco exist, for example?
Yeah, great question. So I think Soil, we're based in Malta. The company is based in Malta, where we're actually physically most of the time in Poland, but honestly everywhere at the moment. And so Malta is our structure for Soil, and we really did a strong job before we even launched Soil in order to be compliant. And so we compliant with MiCA regulations in Europe. And so we have actually, as you know, we have actually an agreement, a statement from the regulator in Malta, which is the MFSA, that we are compliant with the MiCA regulation, the way the business model works. So that was, I think, very important for us. And also with our background in, traditional asset management, we wouldn't allow ourselves to kind of, try to kind of play it not legit.
No gray zone.
So that's exactly. And the beautiful thing is what you said with RLUSD. So that's something that we're launching, and we'll get into it. But our model allows anyone from the world to quickly do KYC on our platform and then deposit anything from $10 to $1,000 to $1 million. So we really kind of make that barrier that what really was important for us, the democratization, that no matter in the world, if you have $10, if you have $1,000 and you have RLUSD and you want to start earning yield, you can easily, just onboard to Soil. We are compliant, so it works, and I think that's super differentiated for amongst other projects. And then we as a team, obviously, as today, you guys can always reach out to us, and we're happy we're facing it. So that's Soil. But going further, looking further, and then seeing actually what the community wants, how we can kind of provide value to XRP. Why Orco? Orco is kind of, we have a holding company, and the holding company is based in Abu Dhabi. And then the holding company is the owner of Mount TFI, which is, licensed in Poland. We can do funds in Poland, which are, one of the vaults is actually using one of the funds in Poland. But what Poland doesn't allow, it doesn't allow asset management, let's say, so self-custody for, clients for any crypto strategies. So what we started saying, okay, Soil can do, be kind of an onboarding to vaults. Poland has the funds in order to kind of be the engine for the yield. But in order for us to kind of go further, and then, the world is going on chain, the financial market's going on chain. So if I want to provide new cool products to, let's say, XRP in the community, then I need to have a license that can make it work. And so we decided to go set up Oracle Asset Management, which is under the holding, and that's based in Abu Dhabi. Abu Dhabi, we are at the process of getting a license for asset management, fund management in Abu Dhabi. So really the stuff that Europe, it's a little bit difficult to get. We're having that ability to do it in Abu Dhabi. The regulation is very stable and is very pro crypto and blockchain, which we're loving. And Abu Dhabi, a lot of people ask, why not Dubai? And so in Dubai, which is, I know Ripple set up in DIFC. So the thing, it's actually, quite a bit of know-how in it, but Dubai is very, either you're more like payments and DIFC and you're working with FSRA, and when that's, where Ripple is. Then you have, for example, Vara, which is very crypto native, but you can't really go between traditional world and crypto world, let's say, or blockchain world. Whereas Abu Dhabi today, you're able to, under one license, have traditional asset management and digital asset management. So let's say you come to me and you're like, Nick, can you guys make a portfolio? You're a user, like down the line, I want to have, let's say, a strategy that is, crypto natives. I want some lending. I want some staking. I want some whatever you want in the crypto world. We can provide that for you under the license. But let's say you want, stock, you want bonds, so you want a financial portfolio. Today, not everything is tokenized unfortunately, everything will be, but then that license allows you to provide, have the ability to manage not tokenized assets just yet, but when the world will be all on chain, we already are set up there and we can do it all on chain. So that's kind of like, we've been around the world traveling and finding the best legislation. So Malta, Poland, Abu Dhabi, that's kind of our structures at the moment.
Okay, yeah, makes sense. Having this set up, there's like this obvious question that you always have in DeFi. One part obviously is how the licensing is working, how the corporate structure is working and legal. But the most obvious question that everyone has when you invest in DeFi is, where does the yield come from? So Nick, where does the yield come from?
Yeah, that's my favorite question. Great question. I think it's the magic question, and I hopefully everybody is asking that question. So the question with where the yield come from. So we have, if you're gonna go on XRP.soil on that code, we're launching on Tuesday, and you as a user will have the ability to deposit your RLUSD in 3 vaults. RLUSD, why we also came out quickly, is in today on XRPL, it's difficult to get any yield on RLUSD. You can only match it with XRP. So to get yield that is stable today, it's, let's say, almost impossible. So what we wanted to do is provide stable fixed income yield that you can make on RLUSD. So today you can go to, let's say on Tuesday, the pools will be accessible. So you have 3 pools. You have liquid pool, yield pool, and then the credit pool. So to break it down, the main idea, the main question you should ask yourself is, how much yield do I want? And for how long do I want to, let's say, deposit my capital? And so this is very important, because if you want higher yield in, let's say, in the financial world, you have to kind of deposit your capital for a longer term. So if you have RLUSD that you don't want to speculate with, and you prefer to have a bigger, let's say, yield, then go for, let's say, the longer duration yields, which is, let's say, credit. If you want, to have, good liquidity, quick liquidity on your RLUSD, because you're thinking the bull run's coming or it's a good time to buy, then don't go into the credit pool, because you won't get your capital back quickly. Go into the liquid pool. So I think that's the first question you should kind of ask yourself, choosing which pool to go to. So then moving into the pools, the first pool, which provides a yield of, let's say, fixed yield of 5%. And why we provide fixed yield? Fixed yield is because the underlying assets, usually the returns are fixed. So that's kind of why we can provide fixed yield for our users. And so the first pool, which is liquid, it is a mix, let's say, of crypto hedge fund loans, which are all on chain, as well as government bonds. And we can use, let's say, which we use, let's say, BIDL, or you can use the stablecoin from Ondo. But the first pool, we provide, because my background is in private credit, we're very good at structuring loans. And what we decided to do is that how we can have liquidity but a higher return, let's say, than government bonds, we provide loan directly from soil to crypto hedge funds. And so we provide them loans. They use these loans, let's say, for trading. The way we collateralize, let's say, we're against the equity in the fund. So let's say if investors have 100 million fund, we provide a 5 million loan. We're always repaid before the equity. So we're always repaid before the fund. However, obviously there are risks involved. So we always focus on great funds, big track record, good structure, licensed business, a great portal for us to see everything. And that's number one. Number two, we always look obviously at the teams. And number three is we kind of, because we're credit guys, we're able to kind of structure different covenants that give us security. So for example, let's say if the return of the fund falls too much, let's say on the performance, we get repaid or we get noticed. The debt to equity, so the amount of, let's say, loans you can have towards the whole fund amount, it can never be more than, let's say, 15%. And then so we really have these ways, kind of like a bank, to kind of secure ourselves and to keep management of how, let's say, the loans are doing. So these are loans, and usually these loans have 2-3 day, let's say, liquidity. That's the beautiful thing. So every 2 days I can kind of redeem my capital from the hedge fund. And so these are, let's say, the bulk of the returns, which, let's say, are let's say between anything between, let's say, 5 to 10%, usually annually paid. And then what we do, because it's 2-3 days, in case we need better liquidity, a bit of the portfolio is in government bonds. So government bonds are tokenized government bonds. They have, let's say lower yield today. I think the yield on government bonds is sub 4. So that is the beautiful thing is you have instant liquidity. You can get in and out, in and out. So we have that ability to kind of have that on and this is all in XRP. So have the ability to have yield, let's say government bonds, but the bulk is a hedge fund loans, which we structure. And that's why we can give you guys a better yield than, let's say, Open Eden or straight up government bonds yields, which are great and have great liquidity, but we give you that extra buffer, and that's why if this yield, this loan pool gives you 5%, but you have 3-day rolling. So let's say you want to get your capital out, you have, let's say, up to the maximum 3 days, but usually 2 days, we give you the capital back. So let's say you want to trade, and say, okay, I want to get my money back. In 2 days, you have your money back. So you're making better returns, but you don't have instant liquidity. You have 2-3 day liquidity. But that's kind of the premium of the, let's say, the 2% that you're getting above 1 or 2% above the government bonds. So that's the first pool. The second pool we move over
it's the most secure one, in a sense that it's like in a sense from a risk perspective, right? Because the higher yield pools will earn more, but because they will earn more, you will have to accept certain risks that are higher than on the liquid one, right?
Yes, mostly yes. I would say a bit of no, in the sense that the credit pool is, in my opinion, I would say also very secure. In the sense that I would say the second pool is, let's say, if you can say on a risk perspective, a little bit more risky, because the third pool is private credit, which are loans secured in the real world. We'll get to that, but normally you're right. I would say usually the risk goes up when you go in the yield, as well as the duration goes up also. So on that, you're absolutely right. So the second pool is yield. The yield provides 7%. And the way we provide this pool is we've been developing for the last 4 years. Good story. At one point I wanted to get, being in this universe, I wanted to start earning, let's say, yield, but I was thinking, how can I earn a yield in crypto and blockchain, but not having the exposure to kind of the huge volatility that, let's say, the main tokens kind of provide us, right? And so my idea was, okay, I started looking at different solutions, and we started finding hedge funds. So crypto hedge funds. So they're usually they do the same strategies that normal hedge funds did in the universe, but now we're just changing the instruments from equities or, let's say, commodities to tokens, and then being able to kind of make money, let's say, in the digital assets. And so I started investing privately in a few funds that performed quite well. I met, two friends that were doing it also in a bank in Luxembourg. And so, over a year ago, we kind of came together and we're like, listen, digital assets are great, crypto's great, hedge funds are great. But at the end of the day, it is a new market. There are risks. There are counterparty risks, smart contract risks, obviously. And then we're like, okay, I think it would be awesome to kind of, get a higher diversification on our money. So we're like, okay, how about we pull our money together, and then we bring in different funds instead of you have one fund, I have one fund. And let's make a portfolio of funds, which kind of diversifies our risk, but we grab new cool managers and kind of give this uncorrelated kind of portfolio, which can kind of like give us an attractive yield. So we decided with the fund manager is called Montera Capital. The fund's called M Squared, which is based in Malta. And what we did is we have a fund that invests in different crypto hedge funds across the world. So it's a funds of funds, but we invest in managers. And then what we do is we diversify geographically, we diversify regarding the strategies, and then we choose the best manager in a specific strategy. So if we have, let's say, market neutral portfolio, we have, let's say, arbitrage between, let's say, exchanges. Then we have funding rate, which is really quite popular. Then we move into, let's say, different strategies, let's say like statistical arbitrage, or different quant directional strategies that, I can, get really into. But we decided to kind of have a portfolio of 12 to 14 managers, diversify, check, the risks, check which platforms they're trading on. And then this portfolio provides us yield. And that yield is exactly the yield, the 7% that you can get allocating to this pool. It's a 30-day. The difference between the first one and the second one, which I told you about duration, it's a 30-day duration. So let's say, again, you want to get your funds back. You have RLUSD, it's working, you're making 7%, and you're like, I want to get out because I want to get out. And then you have to wait, let's say, 30 days since you, let's say, click redeem. So usually it's by the end of the month, 30 days gets implemented, and then you wait for your funds to get back. So that's pool number 2. So very on-chain crypto hedge funds, but we really do a good job of diversifying it. And we have an awesome guy called Casper and Milan, both guys that are on the clock doing it. So last night we were talking to a lot of investors, seeing what's going on and talking to the teams globally when what's going on. So that's pool number 2. And pool number 3, which is a little my favorite pool.
That's your highlight.
because I'm a private credit guy. So I love this pool in the sense that private credit because why I love this pool. There's a couple of reasons. First of all, getting into crypto and blockchain, you want to democratize everything. Let's say access to financial products, but you also want to give different like funds, so such as what we do in Poland, but anywhere in the world, if it's Germany, Spain, the US, like give people the ability to do private credit, but it doesn't have to be the Apollos, the Blackstones, the Oak Trees. So people that aren't in finance, these are the biggest financial players in the world. They manage, let's say, billions of dollars, and everywhere, every brand, every BlackRock does a BIDL fund, which everybody knows, which is great. But everywhere you go, it's always the biggest names that kind of take over the market, and it really gets me. So I think in this private credit fund, I would love to see different private credit funds get tokenized in the world. And so the third pool is exposure to private credit funds. So we provide 8% on this pool, and let's say the bulk of the exposure is one of the funds that I found in Mount TFI in Poland. So we provide in Central Europe, we provide loans so the fund Mount TFI provides loans to SMEs, so small, medium-sized companies that are really doing the groundwork of pushing the economy forward. So they're doing anything from construction, real estate, construction of furniture, bad debt. So people that actually employ through these funds, we help employ a ton of people in Poland and the countries, in Central Eastern Europe. And then we provide, the entrepreneurs capital in order to grow the businesses. So we provide loans. So the fund provides loans to companies to grow, to acquire other companies, to refinance their capital. So anything to really push them to grow, but it's a loan. So we never take, equity. We never take ownership. We provide a loan between 1 to 4 years. Always have very good security. And this is key because there's not many private credit players in Central Europe, let's say, or especially in Central Eastern Europe, you can get very good collateral for your loans. So I can get a loan that's paying me, let's say, above 10% a year, but I get very strong collateral in the sense of mortgage, security, pledge on shareholder loans, cross collateral on any other assets. So this is a great ability to help companies grow, but also secure your capital, clients' capital with very strong collateral. So that's kind of private credit. And so private credit, we have a blend of funds such as Mount TFI. We have Apollo, what I talked about. Then we have Hamilton Lane. These are tokenized private credit funds that have exposure in the US, which is great. So we have Europe covered, we have the US covered. And then in the future, when we see different tokenized private credit, we would love to have a global portfolio of private credit funds around the world where, clients can make, 8%, but diversified between different, companies. And through our capital, we're helping economies grow, which is the kick-ass part
which is awesome.
Of fighting. Yeah, which is exactly, which is awesome.
Yeah, because lending out money is like, sure, you can do it, but if there's no purpose, it feels like dull, So
exactly.
It's always
because you can always make money, right? And like at the end of the day, we can always try to make money. But if you're doing it in a way where your loan is actually helping someone or a company to grow, we only finance companies. So it's really cool, and I think that's something that really gives back in finance if you're able to kind of help companies grow and help get people employed and help work. Right. And so that's the private credit pool. So that this is the bulk of how the yield is made in private credit. Remember, higher yield, you have to commit longer. So here you're committing for 90 days. So let's say about 3 months. Why? Because private credit usually, the fund managers, the Mount TFI, provide loans between 1 to 4 years. So I would be lying to you if you would have daily liquidity, because at the end of the day, in a quarter, I have to always check if, Mountifa has a liquidity in order to provide, give back the money to clients. So that's why it's quarterly, and it's a higher yield. So that's kind of, that's it. So those are the 3 pools. We're happy to kind of, tell you later about, more stuff that we're trying to do on the Orco, but today it's RLUSD yield. So in stable coins. And I think this is really important. We provide yield in stable coins. So in RLUSD, there is no additional tokens or different kind of weird incentives. It's straight up stablecoin yield.
This was just the first part of the interview. Hope you have enjoyed it so far. In the second part, that I will release tomorrow, we will talk about Sol's roadmap and what to expect in the future after the official launch on the XRP Ledger. Will they use the upcoming lending protocol? We will see. See you tomorrow, guys. Ciao, ciao.